Oh, thanks, Rob, for that intro. Now we're going to head down into Argentina. Minera started really as an exploration company, but has grown into being a producer. We realize exploration really maximizes shareholder value. Production, of course, the production side of our story, you get leverage to the cash flow, but leverage to the metals prices. And I think an important facet to Minera is the exploration track record of the management team. We've had 2 discoveries within Argentina. We're the only junior that can make that claim, and had some other success within Latin America. So first off, I'll jump into where the projects are located. As Rob mentioned, we're down in one of the greatest places on the planet, we think, for epithermal veins, which is down in the southern part of Argentina, where our San Jose mine, the joint venture with Hawkshield, is in production. And our new copper discovery is up in the northern part of Argentina that we'll go into in a little more detail. The San Jose, as Rob mentioned, this region, 20 years ago, there were no mines. And I remember when I first met Rob, I said, this place looks like Nevada, only it looks like Nevada 100 years ago. No modern exploration. For some reason, this region of the world didn't receive any modern exploration. Cerro Vanguardia was first discovered back in, 20 years ago. They were looking for a barite source for the oil and gas industry. A geologist ran some samples and they discovered it was high-grade gold, and so the rest became history there. The veins are so large, they show up like the Great Wall of China on Landsat imagery, so it's quite amazing region to be exploring in. We started, everybody was working down here in the 90s. We started at the other end and made our first discovery in about 2 years. Right now, the reserves at San Jose are roughly 1.6 million tons. This is very high grade. It runs about 500 grams silver and 7 grams gold. We've also got a substantial resource base there also. So it's about, on a reserve basis, of 3 years plus of mine life with then a bunch of resources. These are high-grade underground veins, but they're typically trying to mine mechanized at several declines on the property. This mine, for 2008, we reached a milestone. These figures that I'm quoting too are 100%, and keep in mind that we own 49% of the project through the joint venture. This is now the 9th largest silver producer, primary silver producer in the world at San Jose. And there's not a lot of primary silver production mines around. And this truly is a nice size operation. It's had its growing pains as they've worked through the development and expansion of the mine, but producing quite nicely now, anticipated to grow for this year. If you look at production and growth, we've now reached in the processing facility a capacity from 750 tons a day. It's moving up to 1,500 tons a day rate. The underground now is catching up with that, and we anticipate later this year that we would be producing close to 1,500 tons a day from the underground. Right now, they're making up the difference from the stockpile, so they're mixing lower grade material with the high grade. So therefore, you can see their forecast production for 2009 will be up about 40% anticipated from the 2008 numbers. Also, no hedging. We did a facility there with Hawkshield as they went public, which allowed us to put together a debt facility with Hawkshield, and they only get paid back out of cash flow from the operation. So very nice situation for us to be unhedged. And I want to spend a little bit of time on this slide because I think it's very important. And it was one of the things that I talked with Rob quite a bit about when I first met him. several years ago, and that was the exploration upside. Because these high-grade vein systems, veins tend to occur in clusters. We're mining right now on Huevos Verdes, Cosby, Freya. So within that 2-kilometer radius circle, 95% of the exploration and work has happened on the property. Right now, we've identified over 40 kilometers of veins, vein trends on the property, but they're only working on 15% of it. So we see a lot of blue sky upside. One of my favorite areas down south, this is approximately 6 kilometers away. We drilled that back when we had the project before we did the joint venture. There's 35 meters of 4 grams gold and 617 grams silver. So you've got some very nice high-grade intercepts that are away from the main workings, showing the blue sky potential. Also, you step up 10 kilometers to the north, the same thing. They're in reconnaissance work up to half-ounce gold, high-grade silver. Their discovery cost per ounce there is quite low, $6 an ounce, 11 cents for silver. So wide open, multi-vein system, lots of room for expansion. If you zoom in on this a little bit closer, these areas in blue are the 3 veins that are currently in production. You can there again see some of these high-grade bonanza numbers that they've drilled. We've had very good success with geophysics, so these areas in pink represent the anomalies. Every time they've gone off and drilled one of those, they've hit another vein, so we've had a very good success ratio. You can see some of the numbers here, 1.7 meters of 5 ounces gold, 348 ounces silver. So that's material that's over $7,000 to the ton. So you get these high-grade sweeteners and pockets within it, which just goes to the bottom line.